Friends, welcome back to another episode of Price Action Trading on Bank Nifty. We will see what our favorite instrument Bank Nifty did today and what could have been the good price action setups for today. But we will take a deviation today because today we want to focus on identifying when there is institutional selling in the market so that as retail traders we go with the big boys and make money in the direction of the institutions. Now, in today's 5-minute charts, we will identify how the institutions showed that they are active in the market. So, as you can see, the market opened gapped up here, and in yesterday's video I had given three suggestions how the market might open. If the market opened at the same level, we would have touched this high to test the high. If the market opened gap down somewhere around this level, the market would have again gone up to test this high. And the third was if the market opened gapped up. So that's what happened today. And I said that if that happens, that means our profit target is met to achieve the high of yesterday. And we will look at how price action will evolve during the day. So today the market opened gap up, and this huge red candle was where a lot of selling came, and this whole candle is about 193 or 200 points. So we knew right from the get go the institutions are active. That means so much selling has come that the price went back below yesterday's close. Then the next 3 bars again, next 4 bars again, the price tried to recover and achieve this high. These were big bars, but it could not sustain, and with this double top, this and this, the market started to fall again. So this huge bar is what indicated to us that the institutional selling would be active today, followed by this huge red bar. Then after this 10 a.m., the market just went into the sideways mode, and also the market went below the moving average, which meant that more or less today's price action is going to be on the downside. This whole time in the afternoon was the worst time to trade because you can see the size of the bar and the size of the tails, as well as most of the bars are overlapping. This bar is overlapping in this bar is overlapping in this bar is overlapping in this, these two bars are overlapping, these two bars are overlapping. So all this time the market just tried to, the retailers just tried to push up the market and win control of the moving average. At this particular bar, I also had become bullish. I thought that this down action has finished and the market is in uptrend, and so after this bar the market will continue its move upwards. But then what I closely monitored was that after breaking the moving average there was one push up, second push up, and I was waiting for the third push up to go as high as this high or the high of today or this high of today. But on this particular bar the market started to fail, and I entered a short trade here as soon as this bar took out the low of this bar. So I was in a very good profitable trade, though unfortunately during the first half of the trade I had made some losses. My first trade was profitable, then I had taken a position here, scalp. Then during the all this period I also traded and I suffered losses, which is something I have to work on. But on this particular bar I saw that this first, second and the third push has failed, and because there is a wick in the beginning, and as soon as this red bar took out the low of this bar I entered the position, and I was in some decent profit and wanted to hold this whole move down. Now here is what the institutions are shouting and telling us, that they are again active in the market. They said that we opened the day with a big red bar, retailers tried to break the high, it failed because it closed below the open, and then the institution said we will push the price below the moving average so that the rest of the day is going to be a negative day. The retailers tried to take the market up, they really got slaughtered, lots of stop losses would have got hit, and then this bar again told us at around 1:15, and if you search my previous videos, this was the start of the third session of the day, that the institutions are back in action And then this bar would have told us clearly that the institutions will take the market much down. So as I told you, I entered the trade on the breach of this bar. I was in profit here. This bar was classic. It touched the moving average and then it has to continue down. But if you see this bar, this particular bar took out my stop loss because I had set my stop loss when this bar's high is breached. So this bar's high is 48445.45 and this bar high is 48446.75, and I just got stopped out from a very beautiful trade at this bar. So this is a classic trap which the market sets up. But if we have our conviction in our trade that yes, today the institutions are going to be the sellers, this bar and this bar, and all the day there are not so big buying or selling bars, and this in the third part of the day the institutions have again told us that we are reclaiming the moving average and we have a big trending bearish bar. And as soon as this bar's high crossed this bar, so lot of bearish traders like me would have got stopped out. So ideally I should have set my stop loss maybe 10 or 15 points higher than this, but there's still a long way for me to work on my psychology. And this bar gave a lot of profit, 72 points, 63 points. This became a doji and we knew it's going to be one down, two down and the three down. So if you look at this is three push down, one push, two push and three push. So this whole move anybody could have captured. Here there was a chance that this because of this doji the price might revert and go to the moving average, but then this doji failed in this particular bar, so we knew that the moving average will not be touched now. And the second part of the trade, where because here I could not make enough money to cover my losses during the day, the second most important setup of the day was an exact opposite of the setup which I told you yesterday. Now this requires you to have an open mind. See what has happened during the day. The market has started to fall, retailers trying to take it up, and the institutions are saying we are in a selling mode, and then retailers try to take the market up with their small bars and small capital, and institutions are saying we are back in action, we are back in control, so we will push the market down. Now if we zoom in on this particular price action setup, this and this, so this is a classic W reversal on the upside, but this reversal failed. Okay, I'll show it to you again. This down, this up, higher low, and after this the price should have just zoomed back on the upside like this. So this was the classic reversal bar, but two things happened. One, this reversal bar failed, okay, because we can see the price did not go down. And if we look at yesterday's price action, here I had told very clearly that after the strong buying by the institutions, the market went into a triangle, which is a continuation pattern. So when this triangle was broken on the upside, we knew that the institutions are back in action, so they just took the market up. The same triangle happened today. Look at this closely. We have this triangle bottom and we have this triangle top. So as soon as, so these bars would have tested a lot of patience for most of the traders, but anybody who would have seen that yes, the institutions are back in the selling mode, They tried to reclaim the moving average, failed with this bar. All these bars, they are just trying to fight and do something. And with this particular bar or this particular bar, when it broke out of the triangle, we were very confident that this first move down, triangle, and there will be another second move down up to this low. So this is the trade I took. I entered the trade somewhere here and I got some money here. I got some money here. All my losses for the day were recovered, and very foolishly I exited the market. But the market was screaming and shouting at us that there is still a lot of money to be given because we have this move. After the triangle, there will be a similar sized move coming. If you look at this doji's low, almost these many points we could have got. So this whole move of 70 points, or if you look at from the high to the low, this 138 points, it looks very small, but by this time your option would have been in the money. So 1 point move in Bank Nifty will be giving you 1 point move in the option price. And if I had a decent quantity, let's say if you are taking 4 lots or 5 lots, this would have been a good decent amount of money for you today. So this was the triangle pattern which broke and it became a continuation pattern, very similar to the triangle pattern of yesterday, which broke and became a continuation pattern. So these big green bars yesterday was institutional buying. This big red bars today was institutional selling. So this is very important. Now that's the two setups for today. So one setup was just a buying trade after this price on this bar to reclaim this high, and the second trade was this one. Then the third trade was breaking of the triangle and a continuation pattern. Now what's the price action setup for Monday? Now if you look very closely, these last 1, 2, 3 bars, the institutions were back and they bought. So a lot of retailers would have faced so many losses, and anybody who was bearish here, again he would have faced some loss here, because this doji bar gave a clear indication that the market has stopped, and this flag totally gave the clarity that it has reversed and the next 2 bars is going to be on the upside. But I was already in a very nice position of recovering my loss and sitting in a small profit, so I did not take this trade, though some of my other friends, they took this trade because they clearly identified this doji and took the profits in these 3 bars. Now what's the setup for Monday? Now for Monday we can see the markets moved very strongly down, a lot of profit booking because we are in a confirmed uptrend since the 19th of April, and at the end of the day today, in the last 1, 2, 3, 4, 20 minutes, the market has tried to recover, and this upward move will continue for Monday. So on Monday, most likely what will happen is, I can foresee that the market will try to go in a sideways channel. I've taken the high of the day today and the low of the day today as the highs and lows for the channel. The market will continue this momentum. It might open gap up because of this continuous momentum at around 48,500. Then the next few bars it will try to reclaim this high, maybe exceed it but not close above it, and then start to come down. And for the next 1 or 2 days, the market will just be within this huge sideways price action zone, this channel that I have drawn. Because if you look back, this particular price is where the market tested it once and twice. It is not able to cross it. So this is acting as a huge resistance, which is 48,600 price range. And now the market will be just stuck between this big price action range for the next 2 or 3 days. So that's all is there from me today. If you have any questions, please put them in the comments. I will be more than happy to answer them. Thank you guys.